Hello. All right. I'm going to do another market update here. Tuesday, December 3rd. Uh, Markets closed, and basically the market pulled back some today. We talked about that last night. So I guess expect the expected. Maybe a little lucky on the guess, but regardless, markets pulled back. Um, Nasdaq a little less of a pullback, and the Dow looks like a little more substantial pullback. So sticking with the S&P, um, you know, we're below 1800. That's the level we talked about last night. We basically touched 1800, or I should say that was the high today, and not even. And so I would say if we're below 1800, you want to have a seller's mindset, unless if your stock is working. So let's just go back through the stocks that we are in. ExxonMobil, this continues to work. This trend is starting to shift. We basically held this point of control for the month of October, excuse me, and now this thing's changing. So what happens is this morning we opened up, we made a new closing high above this swing high from yesterday, and then into the close we went above this high. So basically what I'm looking at here is our stop can be around 93.22 or below, or if you want to be a little more conservative with it, leave it below 93, below the swing low here. But that's where your reference point should be for a stop. Hopefully this thing, sort of does like what it did here, where it just kind of continues to go up, and we can knock out this average true range stop that is right now on a sell. So we'll have to wait and see, but this is constructive. It looks like we made pretty good timing on this. Hopefully it doesn't, come back and retest these levels, but if it does, your appropriate stop right now is, 93.22 and below, or if you want to be conservative, or I should say have a looser stop, below 93 is acceptable. So basically we want to see it go back towards 96 and then see if it can continue higher. But one thing I want to point out is ExxonMobil is outperforming the market. The markets were down today. ExxonMobil is up almost 1%. That's alpha. That's how you have outperformance in your portfolio. And it just happens to be that, we caught good timing on this. Apple, this was, I don't want to say this surprised me because it's in an uptrend, but it was nice to see it this strong. Overall market relatively weak. Apple outperforming to the upside. Is there really a reason to sell? No, I'm just going to stick with this average true range stop, which should push up towards, call it 550 or so tomorrow maybe. But my stop's going to be under this swing level here, regardless. And I'm still holding a full position, but, the first half has a protective stop around 550. The second half, it's going to be a little lower because I want to give it a little more wiggle room. I'm still thinking 600 is the ultimate target with this 52-week highs sort of thing. This is extremely strong right now. The slope of this current uptrend, this current 4 or 5 day stretch, but we've seen this before. So kind of let it work for you. Let the end of year buyers, support Apple and push this thing higher because that's what it looks like it's going to do. But again, like ExxonMobil, Apple is outperforming the market. I want to show, let's see, Cisco. Okay, I think this could be a trading opportunity. We closed the gap here from back in May, which is good, and we're at the point of control for the year, which is really interesting. So far that's held, and here this is the closest we've gotten to a retest of the disappointing earnings that they did have. Well, I guess they beat estimates, but maybe it was forward guidance or something. I don't remember exactly what it was, nor do I care. I'm trading this for the pattern. And what I'm seeing here is I think you can get in basically at these levels here. Remember, we're looking at outperformance, and this looks like it has some potential. So what I do, I'm going to look at it on an hourly chart, and I'm going to zoom in to just this bar so it looks a little better. All right. The stop does go below 2075. If you do want to be a little more aggressive with with your stop, you can kind of look at this on a micro stance and say, okay, if we get above, you have a high here on this bar of 2126 and on this bar of 2126. So we have to clear and close above 2126, and then you can move your stop just below 21, this swing low here, because that means we're in a new small uptrend. From there, we have to get above this point of control from last month, which is 2140. If we can get above that, then you're looking at this, the swing high from there of 2172, and then hopefully this thing can gain some momentum and retouch these lows here north of 22. I'm not expecting this to go to 24. I don't think that's what the trade is. I could be totally wrong, but I think this is a low risk entry. An hourly close above 21.26, so it's pretty important to me. But I like the look of this on both an hourly and a daily chart. So let's keep an eye on it. Let's see if we can get a winning trade here. DuPont, which I'm going to look at my cost basis as we go here. But this is a short that I did add to today. I love this price action. I love the weakness. I think there's a chance that this thing can continue to the downside, and if the market decides to continue lower based off of what's going on here, DuPont, let's see, S&P down a little bit today, but down, and DuPont down 2%. So what you're seeing here is the potential for more downside. What I like is we're failing from last month's point of control. We pushed above it for a couple of bars, then today we slammed through it. Pretty good selling pressure, and we're below last month's point of control, 2 months ago point of control. So we do have some stuck activity here, and if that's the case, then maybe this has some more downside. Just sub 60 is the low from last month. Let's see if we can get to that. If that's the case, then hopefully the goal would, or the hope would be, that we can continue to push lower, and you just kind of see where it goes. Can we fill in this big patch of light volume and push down towards this volume down here? I don't know. But the point is, this looks like a candidate for a little more downside, and I'm going to ride it. My cost basis, I'm up a little bit on it, 61.32. That's where I'm in at, 61.32. And that's two entries. Today I'm in towards the bottom end of the range, so I did have a pretty good. I think I'm short from the 18th, but I did have a pretty good entry on it. So we'll see if this continues to go to the downside. If it does, then we're all good, right? All right, IBM. Can this push back down towards these lows here? If it does, is it an opportunity? I would like to think it is. I thought, and this is why you use stops in trading, I thought it would hold these lows here. Well, guess what? Yesterday we pierced below these lows right on this bar. I recovered a little bit, but only to sell off again. So my target, basically this high volume cluster, which we're sitting at the top of right now, but I'm really looking at this point of control here at 174. Go ahead and set a price alert, 174.50-ish. Therefore, it gets on your screen. I mean, we're not that far away, so there's that opportunity. But I would be looking at this not so much on an hourly chart, but a daily. And the reason why is because you're not looking for a small turnaround like here, where you got a couple days and then the stock turns around. This is base building. This is pretty big stuff where you have a month or so of rallying. And now we're getting that pullback. Well, you want to get a pullback at the lowest possible entry, which is the bottom end of the range. And I don't want to enter, the stock again until we get a signal that the buyers are coming in. I'll let you know when that happens. All right. Let's see. IBM. JP Morgan. This is a name that I bought on the breakout. It was on this day right here, the 8th of November. That's when I bought it. It ended up it happened to just work immediately. Made new 52-week highs just barely. The trade here, I think, is profit protection. I don't think you want to overdo this to the, I don't think you want to get too greedy. I like the fact that we're holding this volume cluster here. It's also the value area high for last month, so that's good. That's what you want to see. But basically, if it pierces this low here, I'm not necessarily interested in staying involved for too much longer. This 57 to 57 and 5, let's see, 57, 58 level, this volume cluster, in my opinion, we have to recapture it. If we don't, then I'm probably going to take half off around here. Now, you may ask why I didn't use the average true range stop on the hourly here, and the reason why is because I'm looking at a bigger time frame. I'm looking at the daily time frame. I'm seeing this point of control for the year, and usually once you get a move off that, like we are seeing right now, where you have nice consolidation against it, and then the last bit of price action, we get a nice boost off of it. It tends to have a little more juice in the move, which is why I'm kind of looking at Cisco. This could be a decent bounce sort of thing because we're bouncing off the point of control for the year. That's just kind of what stocks do. If you remember Apple, I pointed out yesterday, point of control for the year. Look at the move that we're getting off of that level. And what I mean by that is every dip, every consolidation since then has been a profitable buying opportunity. And that's kind of what we're looking for. With JP Morgan, we want to see the banks continue to move higher. Coke, I want to point out, okay, I originally was buying this around 38 and change here, and we made a new low, so too bad, so sad. But what I wanted to point out was, going back to 2 year, remember the point of control thing? Yeah. We had a huge volume cluster here. Wow. All right, let me get the right tool for the right job. We had a huge volume cluster here. Oh, and this is a 2 year chart. And what we're basically seeing is rejection. Price dipped down into these levels. Price came down to the 2 year point of control around 37.5. And we're above those levels now. So this is a stock that I think if we do get a pullback in the market, again, look at the outperformance today, just slightly, but outperformance nonetheless. If we do get a pullback in the market, Coke is probably a name that you want to be looking at owning. Looking at our hourly chart. We're just consolidating, kind of messy. Coke isn't one that you necessarily want to look at on an hourly chart. Similarly with Philip Morris. I was going to say what's going on there. All right, Philip Morris. You can see this is a range-bound stock on a 2 year chart. And on a 1 year chart, it's not pretty, but I see the potential for a rebound here. We're back down at the bottom of the range where it was right to be a buyer the last time it was here. So the thesis is, why not again? The goal would be to get a gap fill, which, for a slow mover, it's a pretty decent trade. Again, outperformance right here. That's what you want to see. Not Netflix. Bear with me. All right, what I'm looking at is last month's point of control. For the first time this month, we have closed above that level. So I think this is a right here, right now moment. I think that you can place your stop just below 84.70 and watch this thing move higher. I see this big cluster of volume up here at the top, 87.10 or so. If we can get above that, then you look towards the bottom end of this range, the gap fill 88, 89-ish, or excuse me, 88, 75, 89-ish. That would be kind of your target. One thing I do want to point out, and I will do right now, I was looking at, basically opportunities in the market. I was looking at Baker Hughes, and I was like, wow, this thing had a huge gap up, and it's trying to hold it. It did pretty well today, but it's, maybe this is a short candidate to close the gap. And I'm like, okay, cool. How do I get involved in this? Do I short it tomorrow, or what is the case? And then I go to the press release online, which I'll just open as we go. Bear with me. And I scroll down a bit, and then I see, I read a little bit, and first of all, let's see. I see during the quarter we achieved record revenue and strong earnings growth. In addition, we increased margins sequentially in each of our 4 geographic segments. Specifically, in our Eastern Hemisphere operations, we increased revenue 20% compared to the same quarter last year. So what is this telling me? Why would I short this company? They're doing great fundamentally. They killed their quarter. Every bit of their business improved. This probably isn't a name that you want to short. This is probably a name that you want to get long. It's really, really tough for me to say you want to get long here. However, you do have a reference point. This point of control back in, I guess if I was saying this was October's profile, it's November's. October's point of control, 55.75 or so, held in November. Here we are holding again. We want to get above November's point of control here at 57 and change. But if we can do that, here's your range. Basically from 56 to 59, we're at the bottom end of the range. I still don't. It's hard for me to say buy this stock, but I'm glad that I didn't recommend it as a short candidate, and I just happened to look at what they did for earnings. So basically, that's it. I hope this video helps. Let me know. Feedback is appreciated. Take care. Have a good one.